Hello, everyone. Welcome to another episode of our weekly market analysis session. As our manner is, we usually start with the dollar index to look at what the market has done in the previous week and what we hope to see in the market in the coming week. So here is the dollar index, weekly time frame. Last week, price traded bullishly. We had an up close week and then it traded into the low of this bearish candle. If you check the the monthly time frame, it actually filled it completely and poked its head inside the weekly CB, the 75% range. I'm hoping to see it close fully and then probably a rejection lower. Now, this is my prognostication for the next 3 months. I'm looking at seeing dollar rally up. Now, on the premise that it goes above where my cursor is. If it trades above this line and have a body closing above this line, if the body closes above this line, then we'll make a run up to take out this high. But if we encounter some form of resistance here, let me make this big. If we encounter some form of resistance here, then we might do some a little pullback into this range, and I'm electing to see it. The lowest point it could go is to take out this low, because if you check your monthly time frame, we have a BC here around this area. Let's look at it. There's a BC around that area, so any movement lower, this is the BC here, so that's the low I'm talking about. So if it's taking out this low, we have a BC here, buy side imbalance, sell side inefficiency. So any movement down will be to trade into this CB, and then before we resume bullish movements. Now, I don't expect market to come down to take out this low. No. Any movement downward should be supported by this BC here before we rally higher to take out this high. That's one condition. Second condition, it could just keep going up like this to take out this high before it rallies down into this BC. So those are the two scenarios that I'm looking at. As you all know, I'm not a long-term trader. I'm also not a short-term trader. I'm a day trader. So I look at markets as price unfolds on a daily basis. But I'm giving you an overview of my long-term perspective and my intermediate-term perspective. So looking at what I'm seeing here, it has broken this high with momentum and that's closed above it. Initially, when we had this particular candle, this was the month of November. It took out this high. Sorry, network. It took out this high and then rejected sharply. So I expected that, okay, if we see another second rejection, probably it wants to go down. But we could see that December we actually closed above November's high, and then this is where we are in January. So the two scenarios playing out for me is it could keep rallying higher. If you go to daily time frame, we have a volume imbalance around this area. On a weekly time frame, you have a candles wick that could act as a potential premium array. This particular candles wick is another potential premium array where price could trade to and then sharply reject. So if we see a movement higher um, in this new week, then we're going to see price trade to the premium array, this premium, the at least the 50% of this candles week before we see any form of retracement. But if it starts retracing from here, we are looking at it taking out this low before any significant move will be made. Or if it trades higher and wants to keep going higher, the moment it takes out this high, we should see some form of rejection, a pullback kind of thing into this range before it continues going high. Remember, I told us that in the next 6 months, I am anticipating that dollar is going to rally. Now, if it starts stalling here to go down, it's going to be that between now and March, we might see a retracement downward to take out this low. And then after that, the next quarter will be to see price rally higher and then attempt to take out this high. So that's what I'm looking at going forward. What happened last week? How did we trade last week? We had a bearish Monday, traded down on Monday, and then we started rallying higher. This created an SMT divergence between uh, dollar index and GBP USD. Yes. So whilst dollar failed to go higher on Tuesday to take out Monday's high, GBP USD took out Monday's high on Tuesday, while Euro USD failed to take out Monday's high. You can see that Euro USD failed to take out Monday's high. So we had an SMT divergence. That was a telltale sign that price wants to decline on foreign currencies and then rally on the dollar index. So we had that pan out. So we had Tuesday, Wednesday, Thursday, and then Friday non-farm payroll. We saw price traded into this area, 50% of it, and then we had a rejection. Will it continue to go higher? We'll look at it. Now, I actually anticipated that we'll have a sharp rejection on Friday, taking out, trading lower, but it didn't give us that. Traded lower a bit and then repriced it again. Looking at 1 hour time frame, so this was the non-farm payroll. I expected it to trade lower, taking out this sell-side liquidity. It didn't do that. It traded into this buy-side imbalance, sell-side inefficiency, BC, and then we had consolidation, failed to go higher. So this could be a short-term resistance here to trade lower. Now, if it gives us this Monday, Tuesday to take out this low, we might rally throughout the rest of the week. But if it rallies higher Monday, Tuesday, then we might see a decline Wednesday into Friday. So we'll look at how price is going to react around these key levels that I've mentioned. Okay, going to the fiber Euro USD. So last week, let me take off this. Last week we had price traded into, attempted to touch. I expected it to take out that low. It didn't. Yeah, it did, just by some tips, not really much. You could see what happened Monday, Tuesday. Traded up. It failed to take out last week's high, 2 weeks high, and then we had a sudden decline. Whereas GBP USD took out its previous week high, Euro failed to take out previous week high, and then we had a decline. This is not the end of bearish movement. I'm electing to see price trade to this level and ultimately this level. What price does around this level will determine if it's going to continue going lower or it's going to rally higher. Now, any form of retracement, this is where I'm expecting price to get to. This area, we have volume imbalance here and then a bearish order block. And then we have FVG here. So we have a lot of reasons to see price trade up. If it starts going higher, these are want to see price trade to before it continues bearish because I'm looking at uh, a long-term bearishness on Euro USD and a long-term bullishness on dollar index. And that's will be determined by how dollar index plays around that high that I marked out. So that's about that. How on daily time frame we had a Monday bullish movement. Tuesday couldn't rally above Monday. It had an SMT divergence with the cable GBP USD, and then we started seeing price decline into non-farm payroll. Usually, typically, non-farm payroll is like the Judas swing. So I was expecting that okay, we'll have you know a significant pull decline into this FVG so that we can have it as the bearish what the Judas swing for the month of January and then rally higher. But that didn't really happen. So let's see what happens Monday, Tuesday. And mind you, Monday, Tuesday, and Wednesday we have the producers price index (PPI) and then the consumers price index (CPI) Tuesday and Wednesday respectively for next week. So hopefully we could see a decline into this, and then we start seeing a rejection to trade higher into this level that we outlined. So this is where I'm looking at. On the weekly time frame, I showed you this area. So any form of bullish movements upward, you could take a buy side liquidity here and then trade to this bearish order block. Consolidate here a bit, and then we'll start seeing a decline to the lower levels. Okay, so that's about that. GBP USD weekly time frame. Let's see what happened. All right. So we had a bearish movement, traded down, clearly took out this low that's broken below this proportion block. So the next target will be this low. That's my next target. Now, with this, I want to see dollar rally up, euro and GBP rally decline to take out this low, while euro trades into that area of inefficiency. And then after that, we could see some form of short-term reversal or retracement. So this for cable, for fiber, Euro USD, I want to see trade into this area of inefficiency. If you see, we had a low here that is relatively equal to this, and last week we had another low, just a shallow run below previous week's low. That is not good enough. I want to see it, trade into at least 50% of this range, and then see if it has willingness to go lower into this other level, the discount level of this FVG. So let's see. Based on that, I'm electing the price is going to go lower in this coming week. Same as GBP USD, we had a momentum bearish candle, so I want to see a surge lower, taking out this sell side liquidity here before any significant pullback. That's what I'm looking at. Before any significant pullback into this range. On daily time frame, we had the Monday rally, Tuesday took out Monday's high, which is a cracking correlation between the cable and the fiber, GBP USD and Euro USD. And after that, there was a fall in price from Tuesday downward. So if you check 4 hours time frame, hold on a bit. This was Friday, traded into Monday, and then we had Tuesday rally higher during London session Q zone, took out Monday's high. If you check 15 minutes and 5 minutes time frame, you see a break in market structure and trade into retracement into FVG for a sell. It was a very sweet sell, over 100 pips, over 100 pips, over 100 pips sell. Let's look at the range from here, like almost 400, 380 pips. 308. That was massive sell for last week GBP from Tuesday to Friday. It was massive. It was really massive, and it gave clear indication for a sell. Let's go to 15 minutes time frame. Let me show you what I mean. Hold on a bit. All right, so this was Monday, equal highs. It rallied up Tuesday during London session kill zone, broke structure here, traded back into FVG, and this was a sell setup from here downward. Massive sell till Friday, till here. Very massive sell. This was indication for the sell after taking a buy side liquidity on Tuesday, having SMT divergence, a sell here, hold it down till Friday. That's what happened. I had a very beautiful trade for the week. All right. So, like I said, we're expecting another form of bullish, bearish movement, at least Monday, Tuesday, to take out this these lows here. That's what I'm looking at. So, PPI or CPI could have that impact to take it down, and then have a reversal to trade up. We have small FVG here, so any movement below this low is going to trade into this FVG before we have what they call it. So let me mark that FVG, and then let's see by next week's analysis, we'll see if actually price traded there. Let's mark it out. This is the area I'm looking at. So I want to see price trade to it. All right. This is the area I'm looking at. Before the end of next week, I want to see price trade into this level. All right. So how many pips are we anticipating to have? Over 200 pips. It should be more than 300 pips, because if we look at let's go to 4 hours. Let's see if there's any reason to retrace up good. So of course, we could have a rally back to this bearish order block, or even take out these equal highs into this area of inefficiency we have under bearish order block here. So if we have a Monday, Tuesday rally up, just as it did here, we had like Monday rallying up, Tuesday taking out Monday's high. If we have something like that, taking out these equal highs into this inefficiency here, that could be a sell signal into that level. If it's being met by this resistance here, which is this bearish order block, Monday, Tuesday, we could see maybe after a reversal during CPI. That could be one scenario. Another scenario could be it could just start trading lower Monday, Tuesday into the FVG here, taking out that low, this line here, this purple line, that's the low of weekly time frame we're anticipating price to get to, and then trade into this FVG. You could do that Monday, Tuesday, and then have a Wednesday reversal. All right, Wednesday weekly reversal to trade up into this area. Those are the two scenarios. So I'm going to watch how price trades on Monday. There's no major news on Monday, so could have a very clean price action on Monday. So if it declines, continues its decline as Friday, if it continues its decline on Monday, we want to see Tuesday take out Monday into this level. Then we could see if it has willingness to break structure to go higher. That's what I'm looking at this coming week. So two scenarios: either it trades up to this place for a sell, or it trades down to this place for a buy. Whichever way, these targets for me is the ultimate target for the week. Trading into that area of inefficiency is my ultimate target for this particular area. That's my ultimate target for the week. So that whether we go higher first before we sell, or we go lower before any form of retracement, whichever way, this is my target for the week. That's why I like to do day trading, because it gives me opportunity to ride the trend in the direction of the market. So that's about that. Now, like I told us last week, I told us that I'll predominantly be talking about the major assets, and specifically dollar index, Euro USD, and GBP USD. But I'll just briefly look at other ones, not in-depth analysis, but just overview of other assets. Those of you that like to trade the Aussie dollar, AUD USD, we are still very much bearish. We are still very much bearish. It hasn't taken out this low. That low is on monthly time frame, I suppose. Yes, the rejection block. The rejection block, it hasn't taken it out. And if it does that, I want to also see this low violated. All right, so that's what I'm looking at. So we are still pretty much bearish on AUD USD. Same thing goes for the Kiwi NZD USD. This low is my target that's traded to the rejection block here. So the next point of call will be this low. I expect it to take trade down to that low, and this is also another low on weekly, monthly time frame, I suppose. This low here, that low there, this low here. So these are the two areas I'm looking at for bearish movement on NZD USD, our Kiwi pair. Then USD CAD Luni has been bearish. We highlighted this area on monthly time frame as our next draw on liquidity. We have relatively equal highs, so price is going to smash it. I am looking at price doing that very, very well before any form of decline. Our yen pair, this high is our next point of target. It has failed in this area of inefficiency. There is no necessity for it to start going lower. I want to see it take out this high. So let me mark that area for reference purpose. This area here, that's our next draw on liquidity. Next one is the Swiss, the USD CHF. We have relatively equal highs here. We have also under relatively equal highs here, and we have area of inefficiency here as CB. So this is where we are looking at. This area we are looking at. So it's a bullish movement for Kiwi. That's where we're looking at on monthly time frame. Same thing goes for weekly time frame. We are bullish on Kiwi. On USD CHF, Swiss. So this is where we're looking at price to get to. So between now and March, we want to see price get into this level. The next is our indices: SP 500, Nasdaq, and Dow Jones Industrial Average. We are bearish on that. We've significantly have traded higher, and we're seeing it making its decline, because you can see how multiple times it tried to go higher, and you could see this creating short and smaller candles. That's a sign of retracement or uh, reversal, ultimate reversal. But low hanging fruits, this low is my target, and then we'll see how it trades around this low. If it trades through it with momentum, then we're going to take out the next point of call should be this low. On Nasdaq, same thing applies. For Nasdaq, we have this low here. We have this one. Ultimately, this one is what is going to draw to this particular one here. So let me take this line down here. Yeah, that's it. So this line is what I'm looking at. That's that low there. For US 30 or Dow 30, want to see it trade to this bullish order block, and if it breaks through the bullish order block, we have this low and all these areas of inefficiency. So let's see how it trades around this bullish order block. Gold. Gold. This thing is supposed to decline. It's supposed to decline. Now, if gold breaks above this high or this particular line that I drew out, I think that should be on daily time frame. Let me see. Yes, we have inefficiency here and equal highs here. So perhaps that could be the area of resistance for it to start going lower. But if it breaks above it and takes out this high, it will force dollar to be bearish because gold and dollar, they are inversely correlated. A lot of times when dollar is bullish, it means that gold will be bearish. But once dollar starts uh, going lower, people tend to take their assets to gold like a safe haven. So that's the relationship between gold and dollar. So if technically speaking, if this goes higher, takes out this buy side liquidity and fails to drop, it continues going higher, then it will force dollar to start declining. That could happen if dollar starts rallying to take out the buy side liquidity I outlined before it starts going lower. Then it will give this momentum to go higher as it starts declining. So it could stall here a bit, giving room for dollar to rally higher, take out the buy side liquidity, and then when it starts declining, this could then have its way higher to take out this buy side liquidity. So that's what I'm looking at. But if it goes higher now and it starts breaking lower, then it will be a smooth ride for dollar to climb higher. BTC BTC has been struggling after trading to the 108 level. It's been struggling to get to that level. We saw it try to go higher early this month. It has broken again, broken lower. These are equal clean lows here, and I feel that price may want to retrace a little. We have areas of inefficiency here that price could trade to and have this other block here. So I feel that um, BTC might want to decline because in recent times it has actually gone against the usual or the anticipated move with the dollar. Normally, when dollar goes up, BTC goes down. And when dollar declines, BTC rallies. But we saw that it actually um, changed its protocol recently, I think last year, late last year. So as it stands now, it's actually not a symmetrical market for um, BTC and Go and dollar. So we need to be careful in our analysis. But looking at it technically, I'm seeing relatively equal lows here, and that's drawn liquidity. And then we have buy side imbalance, sell side inefficiency here, BC that has not been traded to. So our next point of call could be to trade to the BC is offering sell side as we have buy side given. We need to see corresponding sell side. So this may be a short term or intermediate term high for BTC, and then we'll see if it has willingness to go lower to reprice this buy side liquidity that has been offered here is on the weekly time frame now. So if it crashes below these lows with momentum next week, then we'll see all these give way. All right, you might not necessarily take out this low, but at least you trade to this bullish order block. That's what I'm looking at. So that's my analysis for the market going into the third week, or supposedly third week of January. I think so. So let's see how it goes. Dollar, we anticipate it to trade higher, take out last week's high, and then if it continues going higher, then we want to see how it trades around this inverted hammer, I guess so. And then if it goes above it, then of course this high will be taken out, and that will mean that what do you call it? Gold will decline. But if it trades to this level and starts declining, it will give room for gold to rally. And then I also told us that any decline for dollar is just to take out this low, and that is it. No necessity for it to trade to this level. There's no necessity for that. I don't see that happening. Any decline should just be to take out this low, because if you go to monthly time frame, there is an FVG here that price might reprice to. That might be the only downside objective for the dollar before it resumes its bullish movement again. All right, so that's about that. So we want to see, if you see a Monday, Tuesday rally on dollar, want to see decline from Wednesday, or at most New York session, Tuesday New York session, start seeing a decline. All right. Remember, we have PPI and CPI on Tuesday and Wednesday respectively. So let's see how price um, plays out within the week. Like I always advise you, please trade with the amount of risk that you can control. Don't over risk and don't under risk appropriately. Thank you very much. I'll see you guys next weekend with another edition of our weekly market analysis. Goodbye.